Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of November 25th. Just a reminder, it is a holiday in the US on November 28th, and it's also an early close on Friday. US markets closing at 1 p.m. Eastern on Friday, November 29th. So each week I go through the same process, just deciding how aggressively I want to be trading stocks. We're also going to look at gold and Bitcoin. And we look at a few metrics here which help me decide, how aggressively I'm going to be, which direction I'm going. Conditions are good, so we'll get to that. Some watch lists you might want to check out. The best swing trading stocks list for November, just high momentum stocks. Check those out. So let's see how the indices are doing. I like to look at a few different indices. We have the NASDAQ, the S&P 500, the Russell 2000, the NYSE Composite, each looking at a little bit different segment of the market. And we also have the Canadian Index. Everything in uptrends right now. If we look back here on the NASDAQ, we can say higher swing highs, higher swing lows, moving up. S&P 500, same thing. A little bit deeper pullback here right at the start of November in all these indices, but they recovered quickly, higher swing highs in all of them. So that's what we want to see. Canadian Index as well, super strong at highs there. So everything in an uptrend right now, price action looking good. Bitcoin just hanging out near 100,000. That was the target I liked for potentially getting out of positions. It started accumulating early 2023. Been trading in and out of it, but that was basically my roadmap, was to 100,000. So I have no real outlook beyond this. So that's why I got out. Big psychological level. I want to see how it acts around then. It's been a really nice gain and trade. Both recently and long term. So just going to reassess here. We haven't quite hit the 100K mark, but very close. We have gold miners, which we talked about. Should have drawn that in. So we have a lower swing low here and a lower swing low here. These lines are in here because of the divergence that had occurred a couple weeks ago. We had the miners make a lower swing low while gold on the equivalent day was making a higher swing high. That's a bad sign because gold miners can often lead. We ended up getting follow through to the downside. We have bounced, but because of this lower swing low, not where the line's drawn, but this low compared to this low, and same with on the miners, this low compared to this low, that's downtrending behavior, right? Lower swing lows. That's the opposite of what we're getting in the stock market, right? Higher swing lows, higher swing highs. This is lower swing lows at the moment. We're still at a way lower swing high, even though we've bounced at the moment. So this is just of no interest for me to get long. That doesn't mean it can't go higher. It just means it's not setting up in any way that I like. I'm not going to buy something that's showing downtrending behavior, at least at the moment. Let's look at the health indicators. This shows what's going on under the hood. This is 200-day moving average. I think I just threw it on there to see where it was relative, where the S&P was relative to it, so I could update a scan. I don't usually have these on here, but shows nice steady uptrend well above the 200-day. Volume not important to me at the moment. This is daily percentage movement, and uptrends are associated with smaller drops, especially. I'm not too concerned about the spikes to the upside. It's more if we get a 2% sell-off day in the S&P 500. I know the news likes to talk about points because it sounds more dramatic, but percentages stay stable across time. So a 2% drop on the S&P 500 is generally not a good sign. We had a little bit bigger drop here toward the end of October. That was fine. It quickly corrected to the upside, but we did have some bigger drops here, and we continued to sell off. So basically that first big drop was a sign to be very cautious, and that's why I used that, because we ended up going lower after. This one, same thing. Big drop, and we followed through to the downside. No urgency to get involved after a 2% drop. Wait till things stabilize. And right now, we're pretty stable. This is not predictive. That could change at any time, but at least for right now, we're showing uptrending behavior, smaller daily ranges. Advanced decline line. Advancing stocks minus declining stocks is a cumulative number. It is basically moving with the S&P at the moment. You can see moving up while the S&P is moving up toward that prior high. So it's confirming. It's not really giving us a very bullish signal or a bearish signal. It's just confirming. This is up volume divided by total volume. I'm really just looking for values that hit this upper black line or this lower black line. We've been in the middle for a long time, so this is just a neutral thing. And these matter more after a deep correction. So that's when we want to see them. More like here when we got really high up following this decline. Indicates, that decline's potentially near over, but it occurred a little later. So again, we're really looking for these big values to the upside just coming out of lows, and we want to see and then anytime we get a really low value, that shows extreme selling, but not an extreme where it potentially indicates a bottom. It just indicates bearishness, so we want to watch for those and be careful when those appear. But everything's been pretty neutral for a long time, so yeah, just a neutral. This one's in good shape as well. So we have this one smiley, this one smiley, this one neutral, this one smiley. This is the percentage of stocks above their 50-day moving average. 50-day moving average is a very crude measure of stocks in uptrends. So when we have more stocks that are moving up, generally easier to make money on the long side. And right now, about 63% of S&P 500 stocks are above their 50-day moving average. 62% of all U.S. stocks above their 50-day moving average. So most stocks doing pretty well right now. That means, hey, I'll keep buying. Ultimate indicator: how many quality setups there are and how many trades are and how trades are working for you based on what you're selecting. I use my own trades as a barometer of how aggressive I want to be. When the indicators are good and I'm picking good stocks, I'm going to keep doing it. Of course, when conditions change, I back off. But if I also notice that conditions might be good, but my trades aren't really working out, then I'll take a step back and decide, is it the stocks I'm picking? What's up? Or maybe it's an indication that the market's getting a little overheated and things are starting to pull back, even though it's not quite reflected in the health indicators yet. Sectors on the move: consumer cyclicals, financials, industrials, energy. Okay. And what we're really looking at is kind of what's doing well on most of these time frames. We have the 1 week, the 1 month, and 3 month. So for example, basic materials, which we already talked about, that includes gold. It was up the most on the week, but it's one of the worst performers over the last 3 months. And that kind of makes sense. Everything's been going up. Most stocks have been going up. Gold was really good, but it had this big sell-off, which hurt its performance, obviously. And we're getting we don't know if this is a short-term bounce or a long-term bounce yet. So even though basic materials shows up at the top here, I'm not particularly interested in it. Consumer defensive, that's generally kind of a slower moving sector. As I mentioned up here, consumer defensive and utilities, I don't usually end up in. I mean, if they show up on one of my scans, that's fine. But usually I'm not going to end up in those trades much. So energy, hanging out near the top on the 1 week, kind of near the top on the 1 month, and kind of here in the middle on the 3 months. So it's okay-ish. But financials, consumer cyclical, industrials, those are the ones that seem to be hanging out near the top on all these time frames. Consumer cyclical, a little bit weaker this week, but near the top on the 1 month and the 3 month. So what am I doing right now? Well, taking longs in stocks and nothing in gold right now just because of that lower swing low. I want to see how that plays out. We'll probably need a couple pullbacks or something to start to see how those respond, and if we start getting uptrending behavior, higher swing highs, higher swing lows. And nothing in Bitcoin at this moment, simply because it hit that 100K mark. I didn't have a plan after it hit that, So just took the profits after a nice run, both long term and short term, and seeing how that one plays out from here. So that's your weekly outlook. Hey, if you are in the US, have a great Thanksgiving weekend and Black Friday. Just a reminder, Black Friday sales are going on the course, on the website. If you go to tradeThatSwing.com, trading courses, 20% off everything. Just punch in that code. Have a great week out there.